What separates a good trader from a great one? I believe that a good trader is profitable, but a great trader that has it all is consistent. And let me tell you something. I know that it's hard. I know that it might take a while, but if you get there and if you are careful about it, you're gonna be thankful for it for a lifetime. So traders, today I want to talk with you about consistency, why it's important, how you can achieve it, what do you need in order to achieve it, and many really interesting things about psychology. So don't forget to like and subscribe and activate the notifications if you like this kind of videos, and let's dive into it. I've prepared something for you. Okay, so what does it mean to be consistent? So first of all, I believe that you need to respect the trading plan that you originally made. I know that sometimes you modify it, I don't know, 1 year has passed and you realize that it's not good, or 6 months have passed. But however, if you switch it every week, every month, and you keep switching stuff on it, or maybe you don't even read it, you forget about it and you start trading thinking that you respect it, but in fact you're lying to yourself because you don't use it, you clearly forgot about it, there's no good. There's absolutely no good. You have to write a plan, to respect it, to adapt it to your own pairs, and you have to create a trading plan, you have to respect it, and to not lie to yourself about respecting it. If you respect it, you know it for sure. Do not try to fool anybody, because the one that you're fooling is yourself. If you say that you respect the trading plan, but you didn't even check on it from time to time, or you don't have it on a wall next to your trading desk, I believe that is not good enough. Now, another interesting thing that I observed is that a lot of traders do not respect the initially established risk. For example, you get inside a trade and you modify the stop loss size. You modify whatever you're doing there. Certainly, in the moment that you're in the trade, it makes sense for you, but in fact, you're ruining your future consistency. You'll see that for yourself. I know that for most of you, you have to try it out and to learn from your own mistakes, but when you're doing it, it's good to remember that I said it as well, so now it makes more sense for you to not repeat the same mistake over and over again. Another thing that helps with consistency is to present yourself on the chart weekly. Why is that? Let me show you exactly. So here's an analogy with a plane. I took it from a book, I don't remember exactly what book. However, this analogy fascinated me. So what happens if we do not show up on the chart? Here's a plane that prepares for takeoff in order to arrive later into a point. Let's say that it wants to arrive in Paris. Paris is a nice city, so let's say that. Well, it takes off, it floats, it flies, and then it lands in Paris. It was a smooth flight. And here we have another plane that takes off and lands in multiple countries, in multiple capitals, before arriving in Paris. Takes off here, lands in Budapest, takes off again, lands in Amsterdam, right? And after that, it takes off again, and it lands finally in Paris. Now, which plane do you consider that used more energy? The one that just took off once and landed once, or the one that was jumping from country to country, from capital to capital? Well, the right answer, of course, is that the plane that took off once and landed once is the one that didn't use a lot of energy and arrived in Paris faster. This is us on the charts as well. The most energy that we use is when we take off and when we land. So in order to be consistent on charts, we should take off once, and we should only take off once in order to arrive faster to our destination. So here's an example. This is a chart on GBP/USD. It doesn't even matter what chart it is. This is the first day, this is the second day, and this is the third day of the week. Monday, Tuesday, Wednesday. Now imagine that you followed Monday, you followed Tuesday, and you followed Wednesday as well. Now the movements are clear for you. The price action is clear. You know exactly what happened every day on the chart. You know exactly how the price moved. But what if you open the chart on Monday, on Tuesday you're doing something else, you don't even look for 2 minutes on the chart, and then you come back on Wednesday? It's gonna be a little harder for you to come back on charts and to understand the connection between Monday and the actual day, which is Wednesday, because Tuesday is missing. You have to catch up on what happened on Tuesday. So for you, it's gonna take a little more time, and you are gonna have more questions because you weren't there. You didn't see the price action, you didn't observe the momentum, the volume, everything that was happening live on the chart. I suggest you every day, even if you don't plan to trade, or even if you don't feel like watching the charts, to simply have a look at it for 1 minute, just to observe like the movements, just to remember the connection between Monday and Tuesday, because everything is connected. connected and the market moves in waves. Just observe the waves. By the way, if you're passionate about Forex trading and you need a group with other traders, we have a free signals group where you will receive theory signals and where you can talk with us, because my Telegram user is Andrea FXA and you can always write to me there. And if that isn't enough and you would like more value, we have the FXA Premium VIP channel with 10 to 15 weekly signals from our top traders and one weekly video where we post theory inside that channel. Basically, it's a course. And by the way, we have a special offer. If you plan to trade under our broker's link on a classic account, you can join our premium group for free. More details in the description box. The broker that we are using is regulated. It has a public CEO. It's rated excellent on Trustpilot. It has the lowest spreads right now. It's the cheapest broker that I have found for now. If you want to find more information about the premium group, just write me on Telegram at AndreaFXA just write me premium and I'm gonna talk with you. I'm gonna explain you what's happening. Now, what do we need in order to become consistent? So first, I believe that we need a trading strategy, of course. Trading strategy can be any strategy that you want it. It can be support and resistance. You can trade based on trend lines, on ICT, on supply and demand. It can be whatever you want it to be, because I observed that they are really similar in reality and only the names are different, but the concepts are pretty similar. And sometimes some of the strategies just simply overcomplicate them with different names and whatever. Second, and the most important, is a trading plan that you should respect. Third, psychology. Again, I believe is really important as well. If you do not know yourself and if you do not know how to stay disciplined and how to not show emotions on charts, it's not going to benefit you. So you have to work a lot on your psychology. I believe that you shouldn't be excited when you take wins, and also you shouldn't be sad when you lose trades. This is the idea. You should be a little bit numb. You should be boring. This is the idea that I believe. And fourth, a lot of practice. You should show up on charts every day in order to observe the movements, because if you don't observe exactly how the candles are moving, you won't know when to enter the trade or what are your confirmations exactly, because there's one thing to observe some patterns on something that is already there, a chart already completed, and it's something else to react live, taking the trades live, observing how the candles are moving, right? Because I believe that if you backtest, you lose a lot of things on the way. You lose the essence of trading, which is observing how the candles are moving. So yeah, here's a nice example of Mark and John. I made an example of Mark and John, which are two different traders with two different mentalities. Mark is having a well-written strategy, right? And knows the strategy really well. Second, he has developed a trading plan based on the strategy and he chose his pairs. He is really calculated and he has the strategy on a wall in the back of his office. So he can see his trading plan written clear. He can remember it every day and he respects it. 3, he has worked a lot on his psychology. He has read books, he analyzed his own behavior and he tries to improve every day in order to be better on charts. And 4, he exercises on charts a lot. He uses demo accounts, live accounts, pro-form accounts, broker accounts. He tries many things and practices a lot. Meanwhile, John believes that the strategy is the problem. He changed ICT with Wyckoff, with smart money, and still searches for the holy grail. He changed his trading plan because if you change the strategy, you believe that you should change the trading plan as well because it should match with the strategy that you're using. So you change the plan that you had with ICT because you want to switch to the Wyckoff strategy and you want to create a new trading plan. Or I don't know, there's a lot of analogies like that made by traders that do not want to take accountability for the fact that they're losing. And it's all because of them. 3, he doesn't work with his psychology. As I mentioned before, he tries to blame something else, but in fact it's himself, it's the psychology and the fact that he doesn't work on his mind. And only takes trades from time to time, which is not good. Okay, maybe it's okay to take trades from time to time, but it's not okay to not be on charts and to not observe the movements, because there are many types of traders. Traders that go for swings, and of course they don't watch the charts every day, but sometimes I see scalpers that mention the fact that they don't watch the chart every day. And it's mind-blowing for me, because if you avoid the charts and you do not compound your accounts, I do not see a future in your scalping. So this is only my opinion, but you should be on charts, especially if you're a scalper or a day trader. You should be on charts almost every day. So what happens after 3 years? Mark became profitable, still respects the 2023 trading plan that he created, and lives out of trading. Meanwhile, John still buys courses because he still wants to change his strategy, change his risk management many times in order to fit with the new strategy, and still loses money and accounts. And I don't know, he found somebody to blame. Now the question is, in how long do I get to consistency? The answer is that I don't know when you're gonna get to consistency because you're different from me. We are different people with different personalities and different lives. So this means that I will never be able to tell you when will you get to consistency. But by observing the way that you act on charts, the way that you treat trading, I can tell if you're close to it or not, if you're going to continue with healthy habits. So remember that consistency only depends on you. Do not blame the strategy, do not blame the mentor, do not blame the market. It's all you. So focus on yourself and see the positive part of trading all the time and try to not get distracted. So thank you for watching, guys. I hope that this video helped you, and if you want more videos like this, don't forget to like and subscribe and activate the notification buttons, and I'm waiting for you inside my Telegram community. Thank you for watching and see you next time.